Hello, everyone. Matt Somberg, partner and co-founder of Gottfried and Somberg Wealth Management. Hope you're well. Welcome to December. Just have a few weeks left in the year. Want to spend a few minutes reviewing the year that was, thinking about what's going to happen next year, and share some things that we're working on here at the office. First, let's talk about the stock markets. This is, I think, year 25 for me of helping people with their money, and this appears to be ending as one of the better years on the stock side of the house. The S&P is up 28%. The NASDAQ is up nearly 29%. Stocks outside the United States have not performed quite as well, but those are still up between 7 and 8. It's been a pretty steady climb throughout the year. We have 11 months complete. The market's been positive 9 out of 11 months. When we've had a dip, like we had a 4% drop in April, it was followed by a 5% gain in May, a little bit of a drop in October, and a very big month in November. The market's got clarity on who the next president is going to be, what the Congress is likely going to look like, and any time there is sort of clarity and certainty, it allows investors to put capital to work with more information available. The gains in the stock market have pretty much come across the board. There's 11 sectors in our economy. All 11 are positive year to date, and none of them are close to being negative. The top performer is actually financials, which have had a nice run up really in the last month or so, under the presumption that there'll probably be a little bit less regulation of the financial sector going forward. The financial sector is up 38% year to date. And if it holds, this will be the first time since 2012 that the financial sector has been the top performer. On the bond side of the house, bonds are positive for the year. The bond aggregate is. It's up close to 3%. It's definitely come down a little bit in the last couple of months. Why? The economy is strong, and the economic readings that sort of show how quickly our economy is growing shows that it's growing fast. There's still some fears about potential inflation next year under perhaps some economic policies, but overall the bond market's up roughly 3% year to date. Sort of looking back on the year, we came into the year with interest rates quite high. There was some expectation that the Fed would cut interest rates at some point in time. That did happen. There was a 0.5 point cut in September, 1/4 point cut in November. The expectation is this month, December, there'll be another cut for a 1/4 point. And then it's sort of wait and see. Rates today are certainly higher than they were prior to COVID, but they're certainly not high from a historical standpoint. In terms of the economy, lots of positives. Inflation has come down significantly. Inflation now is somewhere between 2 and 3%. The Federal Reserve would love to see inflation at 2%. I don't know if that's really realistic or possible in the short term, but that's where the Fed would like to see it. But right now it's somewhere between 2 and 3. Unemployment is in a very good place. The unemployment rate is at 4.1. That's definitely a nice sweet spot where people who are looking for work can actively look and find it, and employers have a reasonably good pool of potential applicants to choose from in terms of filling jobs. In terms of GDP growth and how our economy is doing, again, this is a pretty positive report card here. Third quarter GDP was 2.8%. That's pretty similar to the 3% growth that we saw in the second quarter. The Fed would like to see GDP actually slow a little bit. They would prefer it's closer to 2, but right now it's close to 3. So don't really see any sort of a recession in sight anytime soon in terms of the GDP growth that we're seeing. And in terms of corporate earnings, 2024 corporate earnings, the average company in the S&P saw their earnings grow by 9%, which is quite nice. And when we look at sort of the projections out for 2025, year over year earnings are projected out at closer to 15%. So in terms of what we're seeing during earnings season, positive news there as well. As we look ahead into 2025, a couple of things just to keep in mind. Right now, here in December, this is the time of year when people will often do gifting, if it makes sense for them to be doing that. Right now, one person can give $18,000 a year to as many people as they'd like. In January, that bumps up a bit. It goes from 18,000 to 19,000. So 18,000 for 2024, 19,000 for 2025. Estate planning attorneys were under the impression that they might be quite busy next year. The estate tax code sort of expires at the end of 2025, and going back a couple of months with the outcome of the election unknown, unsure as to where the tax code might go. Lots of investors were talking to their estate attorneys to see if there was anything different they needed to be doing relative to estate taxes. I think our best guess right now is that the tax code will be extended out in some form, since the Republican Party put this tax code together in 2017, and they now have control of the presidency and all of Congress. So our presumption would be that this provision for estate taxes will be extended out. Had it not, there would have been a lot of reasons to visit with an estate attorney and perhaps make some updates to the estate plan, but that seems to now be pushed back a bit. For those who are still working, the contribution limits for 401k go up in January. They go up by about $500. There was a new law that was passed recently called the Secure Act 2.0. It allows those individuals that are still working and in their early 60s to make enhanced catch-up provisions to their retirement plans. So if you're still working, there's some bump ups in terms of what you can contribute next year. Here we are in December, probably a good time to reach out to your payroll now and, if appropriate, bump up your contribution limits so that it starts in January. Here at the office, December is probably our busiest month, but in a good way. There's lots of things that need to be done before the end of the year. On the portfolio trading side, we look to do what's called tax loss selling. Tax loss selling is the concept of maybe selling something for tax write-off purposes. So we spend a lot of time on that in December. Those that are over age 73 need to do what are called their required minimum distributions from their IRAs. Those clients either take that money directly or gift it out to charity to avoid the tax consequences. This month, there's a lot of charitable gifting that's done for year-end tax write-offs, whether that's gifting shares directly to nonprofits or creating donor advised funds to put money in for a write-off this year. So we're here, we're busy, and we're paying attention. In terms of overall portfolio construction, there's a lot of wait and see right now. We're sort of waiting to see what the new administration will be proposing in terms of their economic policies. We're waiting to see how accepting Congress might be to some of those proposals. We're waiting to see who the cabinet members are and who the appointees are that the new administration is surrounding itself with. So watching and observing, but certainly encouraged by all of the economic data that we've been seeing, whether it's CPI, GDP, or unemployment. So lots of positives right now. So we'll be here if you need us between now and the first of the year. If there's something that we can help you with, please don't hesitate to reach out to the advisor on our team that you work the closest with. So thank you for all the trust and confidence this year. It's been a good year. It's not over yet. And we'll be back in touch after the first of the year with another update. Thanks very much.